get into the webinar, it'd be just great to provide some high-level introductions. So, Joe, starting with you, would you be able to provide an introduction to yourself and Pleo?
Yeah, happy to. Thanks for that, Anthony. So yeah, I'm Joe Armstrong. I'm a product manager at Pleo, and I look after localization. So that's helping us fit better in the markets that we are. Pleo is Europe's leading expense management software, fully B2B business focus. It was founded in 2016 with a headquarters in Copenhagen, and we have about 900 employees at the moment. Pleo is operating in about 15 markets, and what Pleo is a solution for any business that wants to give their employees the tools they need to buy the things to do their job. So that could be if you need to use a card to buy, for example, an office space to work from, like I'm doing right now, or whether you need to pay an invoice. You can pick up Pleo and you can use it for that purpose. And then at the same time, we look after and automate the accounting and record keeping part of expense management. So it's an all-in-one solution. And yeah, it's available for any businesses there in Europe.
Perfect. No, thanks for that, Joe. And yeah, Stuart, great to have you on the webinar today. So yeah, be able to provide an introduction to yourself and Zilch.
Thanks, Anthony. Hi, everybody. I'm Stuart Sykes. I'm the Vice President of Service Operations for Zilch. So basically, my remit is everything from when a customer comes into the journey, into Zilch, applies for our product, good journey. So they use the product and everything's great in the world, through to the bad journey of collections, recoveries, if we get that far, where things sometimes go wrong for customers. So Zilch, what are we? We're what we call really a BNPL 2.0. We're not your traditional BNPL like a Klarna or an Afterpay. Our product is on a card. We are MasterCard based. You can use our virtual card anywhere where MasterCard is shown, pay it in one and earn your cash back on your bank account, link it to your bank account. So that's great. You get rewards, you're getting these nice things just by using your card, tap and pay anywhere. But if you get towards the end of the month and you're a little bit strapped and you need, something new, you need something for the kids, then you can tap and pay, but actually slide the toggle and pay it in 4. So 25% at the start, and then another 25 in 2 weeks, 25 in 2 weeks, and so on till it's paid. There's no fees. The only fee you get is if it isn't one of our affiliate merchants, it's anything from £1.50 to £2.50 fee at the point of sale, and that's it. There's no interest and there's no late fees and none of that. We actually are the fastest growing unicorn in Europe. We were valued at over 2 billion last year, and we've only been really going since 2019. We've now just reached over 3 million customers. So when we put that in the volume, this time last year we just over 1 million. So rapid growth in the UK, and we've also launched in the US earlier this year out of our Miami office. So very much B2C focused, and more of what we call the Googleization of payments. We're more of that payment side rather than the BNPL side.
Perfect. Thanks for that, Stuart. And yeah, brilliant to have you both here today and joining us for this webinar. And I'm really looking forward to the discussion. So just to provide a quick introduction into Yapily. So Yapily is Europe's leading open banking infrastructure platform, solving a fundamental problem that we see in financial services today, which is access. So we securely connect our customers to thousands of banks across Europe, and we enable them to access financial data and initiate payments. And by doing that, we're enabling innovative companies to embed the power of open banking into their products and services, and as a result, creating better and fairer financial services for everyone. So thanks both. And I think to start, it'd be great to, you've provided an introduction into your businesses and what you do on a day-to-day. But again, Joe, starting with you, it'd be great to hear from you and how Pleo are benefiting from open banking, and the types of customers and problems and use cases you are solving through open banking.
Yeah, so when a customer signs up for Pleo, they get a wallet for Pleo. So as I said earlier, employees are able to spend money for work using their Pleo card, or they're able to pay invoices. And when they do that, we basically hold a bank account for businesses that sign up, and the money that they spend comes out of that bank account. But when customers sign up for Pleo, we don't want them to have to switch banks, right? If it's a customer in the UK and they're using whatever Barclays HSBC, we're not also going to convince them to then switch banks when they switch to Pleo. So we want a way for them to not only keep their money where it is today and manage it with all of their other services and other systems, but pick up Pleo and start running with it. So what they need to do is a really, really easy way of getting their money out from their high street bank and into their Pleo wallet. So that's where Pleo chose to work with Yapily to use open banking so that businesses can top up their wallets really, really easily. We've rolled out open banking so far in the UK. So any customer in the UK can jump into their Pleo account, top up their wallet, authorize it directly from their bank. And then only at the start of this month, a few weeks back, we launched also in the Netherlands, the same use case where customers can jump in, authorize with their phone and top up their wallets. So the advantage we're giving to customers really is to manage their cash flow better, top up their wallet at any time of day that they want. So on the weekends or throughout the week, the money moves extremely quickly, and we kind of have the best of the banking rails in any of the market that we go to by using Yapily and using this solution.
Okay, perfect. No, that's great, and it's great to hear how using Yapily, you're really providing that better user experience, for the payment space for for your customers. And I suppose, Stuart, now turning to yourself, at Zilch, you're probably servicing a different customer segment to Pleo. So again, it'd be great to understand from your perspective, similar question around what types of who is your main customer, what types of customer problems and use case you're solving with open banking.
Yeah, I mean, that, to be fair, what sort of Joe's using it for is kind of, is similar to where we are, but we're looking at it from different angles, into that sort of volume customer space where you find, many problems, and you start off, open banking for us, and while we're sort of moving toward to Yapily, we use it now. We have great distribution within our base of nearly 70% of our customers do click yes, they want to use open banking with us, which is fantastic. But we can get more out of it, and so moving to Yapily, that's why we've sort of taken this step. There's several facets of this, Anthony, that we're looking at. First one is onboarding. Looking at customers. Traditionally, credit firms will take this static view from Experian. Well, okay, it'll tell you some, but if you say you use Experian or Equifax or TransUnion, you'll only get what they have. Not all of them have the same info. We know this. They all are different. So you're going to have to multi-bureau, which is therefore costly. But it's static. So the problem we've got is that we're looking probably 2 months back. We're not looking here and now. So whilst it's it's good data to have, it shouldn't be the be-all and end-all of your credit decision. So you take that data, you take the CRA data, excellent. We put it into our risk engine. We have our own risk engine and modeling anyway. But then we take the open banking data, and I can look at, say, Joe, if Joe applied and say, what is his spend? What is his expenditure? When does he get paid? What are any triggers in there? Are there gambling triggers? Because in Experian and CRA data, you won't see that granular detail to make a credit decision. So we can see that from the offset and really understand our customer. Helping the customer, give them the right credit limits, but also not overburdening them. If we think, actually, looking at the whole picture, this is going to be tight for you. So why don't you just have the tap and pay product? So you can earn your rewards, you can earn your, all of that great thing, but we're not going to burden you with the credit side. We will look at that later on as you get a little bit better, because that comes into then that other part of open banking where we continually assess a customer. And Joe may get through our processing, for our vetting, we give him £300 because we think that's where Joe is now. But we all know Joe's career is going really well. He's doing great, but then in his open banking in 3 months, he's had a promotion. We can see he's paid things off. Actually, Joe, you deserve 800 now. And you offer that to the customer. You can offer more real time. And it comes into when we look at it as well, you're also solving for the FCA consumer duty. Obviously, the new onerous piece that many in the UK have got to try and work through now. That as an FCA regulated business as we are, we have to look at that and say, what are outcomes going to be? Where are our outcomes of our customers? Are we doing the right thing? And are they getting the product that they understand but deserve? And that's negative and positive deserve, don't get me wrong, because sometimes you've got to rein somebody in. And then that takes us into the bad journey, into one of the other parts, which is if those customers are struggling and we have triggers with our own risk service, but we're firing them from open banking, I can actually see that the customer may have had a reduction in pay because their overtime's all been stopped. Or their spending's had to go up on credit cards, which we'll see in there more quickly than we would for the CRAs. We can help that customer. We can send them a nice message to say, are you okay? Cost of living's gone up. We know food inflation at 12%. It's a free budgeting form to help you. It just informs the customer. It gets the right outcomes, and we'll put the customer first. So that's just 3 things there that where you using open banking for, but with Yapily you can get more detail, more granular to get those right decisions. And I think those are so important that it's about putting the customer right at the heart of that and saying what's best for them. We'll put them when we track with them, and then if we, they do get into trouble, how do we help them quickly?
Yeah, no, and I think that's a really good point. I think we're really putting the customer at the focus of this and solving real problems, and we're providing real value through open banking. And we're all seeing that. We all use different payment products ourselves as well, so we can really see that impact as well. So I think that's a really nice point.
Anthony, what I think would be interesting on this as well is, like, we have Pleo that's really B2B focused, and then we have Zilch that's B2C focused, right? It's going to be super interesting to see how open banking is used differently, because Pleo is not actually using open banking yet for credit checks on businesses. Like, we are like a regulated financial institution, so we're doing all sorts of risk checks and stuff, but we're not using that piece yet. And that's another thing I think for people that are listening, like, if you using an open banking platform, you can use it for one use case, but to then move to another use case is not that much extra work, right? If you already have everything else in place, that could be something that we roll into the platform. So I'm keen to also learn myself, maybe from Stuart, about what Pleo could look at on the credit side long term. So it's super interesting to listen to you explain it, Stuart.
Yeah, I think it's coming from slightly different ecosystems and different worlds with your B2B and us B2C, that sometimes I think we silo ourselves, but with something like open banking, and the products, the Yapily products it's quite agnostic about the end point, whether it be B2B, B2C, B2B2C. It doesn't, for me, matter, because we've all got to make some of these decisions on risk. And and in the previous life, I was B2B, and when open banking really first started coming to the fore, and we would take companies' house data and we take all that usual good stuff. But again, that's quite heavy when it comes to assessing the credit worthiness of a company. It's quite heavy. You take it because you really have to. It's a regulation. But with open banking and looking at their business accounts, you can then start to make more informed, quicker decisions. And that's sort of what I've taken back into B2C world, is sort of me assessing that customer and saying, well, I can see that you've got £1,000 disposable income at the end of the month. You've got £500, whatever that is, and then taking a percentage of that and saying, look, we're not going to overburden you, and you've got 1,000 worth, we're going to give you 1,000 credit. But it's saying, well, actually, let's give you 50% of what you've got available. So you've always got that there money, just in case the tire blows. In the B2B world, in case your bills go through the roof, energy bills, which in businesses, they are absolutely going through the roof at the moment, as we know, because of the cap. So, you've got that ability to, for me, really move between static data and fast data, quick data. And then you sort of come into, and a B2B point of view, Joe, and happily to sort of to listen a sec on payments, on late payments, or payments that are slightly overdue that should be coming in, is, customers will get paid on a certain time of the month. Now, as I sit now, if I didn't have open banking for my customers, I don't know when Anthony gets paid or Joe gets paid. I've got no idea. I can guess. I can take a good stab if I've not taken bank statements, because of course CRA won't have that data that's nailed on, and it could move, and things do. But again, with open banking, I can see that Anthony gets paid on the 30th of every month. So why am I going to try and take one of his payments on the 27th? It's going to fail. So that customer's then got to fail, and then they get to 30th, then they have to ring in, make a payment, and then it gets a customer, gets a little bit distraught about it, because my credit report. Well, of course, if we send our credit report on the 28th, Anthony's a payment down, even though he pays it 2 days later, and then he's got to wait for it to be updated. So you've got a lot of knock-on effects here, and everybody listening, just think about those things. That there's a knock-on effect there. So I know that. So why make it the 27th? Actually, I'm just going to push it to the 30th, because I know he's going to get paid then. I know that's not going to miss, and I'm not going to cause more problems with my customer by setting a date that's not going to be met. And when you sort of look at the B2B, Joe, do you sort of see that in what you guys do, maybe invoicing or payments back, that you can get a little 7-day movement and go, what happened?
Yeah, I mean, I was begging to jump in there as well. Like, it's really a parallel in the B2B space with cash flow, right? Like, we're talking about individual person's cash flow, but like it's the same when you think about how a business needs to think about how they pay salaries at the end of the month and what's coming in and what's going out. And if you're using Pleo to consolidate all of your spend, all of the money that's going out, then Pleo has a pretty good insight into what's coming, right? Like what invoices are coming typically at this time of month, or who of your employees are going to travel to, for example, a conference in that particular month. So we can make quite smart decisions around, okay, then how much money do we need to get into the Pleo wallet using open banking at the right time, and only just enough, right? Not too much. So we're getting a little bit into the looking ahead bit, because Pleo is not doing this today. Like, we don't have the cash flow insight to be pulling that money. But when we get to maybe later in the conversation talking about what's coming in open banking, this is absolutely like top of mind for us. Is like, doing that sort of predictive movement of money and making it something that a business owner doesn't have to sit down and push, which is the reality today. Rather something that we can pull or think about how we do in a more automated fashion.
Yeah, no, I think that really good points of conversation. And from our perspective, it's great to understand how both your businesses who have different use cases, different problems that you're trying to solve. You're leveraging open banking. I think Stuart, to your point, it shows how versatile open banking is, and I think from our perspective as well, like we're having so many active conversations obviously out in the market with different customer segments, and open banking is still very much at its infancy, and I still think there's a lot of verticals and use cases are still to be unlocked, and that open banking will power. So I think just moving on, we touched on kind of slightly there around payments. So I think we're in a time now where there is a lot of growing kind of economic uncertainty. For example, we're in this cost of living crisis, and we've seen through research that we've done out in the market that there is a rise in late payments for businesses, and that may be due to kind of legacy technologies and systems, for example. So it's a lot more difficult now to, I suppose, to manage that kind of financial difficulty and know where to turn where these situations do arise. So through a recent research that we've done, we actually looked at different businesses, how they're coping with this, and nearly everyone as part of that survey mentioned that they're looking at changing their business processes because of this, and as you can kind of understand, a lot of them would be kind of to cut expenses or raise prices. But one of the really interesting points was around kind of a third of the respondents were looking at utilization of new technologies. So either they've implemented new tech, or they're kind of exploring the feasibility of what would be the best technology to use. So I think kind of touching on that, because I kind of really see open banking, and a lot of points we've touched on there is and the power of APIs is going to be at the forefront of that. And I think we've proven and evidenced that just at the start of the conversation that it will work for consumers and businesses, and it will really help kind of deal with those cash flow issues, or help solve a lot of the issues that we see, or help a consumer manage their finance. So I think just thinking about that payments angle then, and Joe, from a business perspective and Pleo, like, how do you think the payment experience has changed with the evolution of open banking?
Yeah, I think tying into that, like, management of cash flow again is so important when it comes to especially like facing economic uncertainty, and how businesses can, like you mentioned earlier, that businesses can raise prices, they can make changes to their processes. One thing that new technology can bring to them is like flexibility with how they move their money. So if we look at data from Pleo, for example, we process like 2 million expenses a month, and we have about 1.8% of those declining due to insufficient funds, which is like something that just shouldn't happen, right? Like, you should just have enough money there so that whatever you're doing, you're paying an invoice that's super important, and you're going to get a discount if you pay it by a certain time, which is super important this time, right? The money should be there so that you can pay it. And a lot of the time, the reason for this is not negligence. It's because, you made a transfer on Friday, for example, and then it didn't get in because it got delayed because of the weekend, which is not the case in the UK, but the case in other markets. And then having flexibility with how you move your money and have an overview of all of your cash flow and bank accounts is like one of the easiest ways that you can really like hack that and remove what might be a 1 week process to move your money around and turn that into what could be like a 1 day or 1 hour process, right? To make sure things are topped up. So I think the experience really is going to be for admins and finance teams, really simplifying the human hours or admin hours needed to just manage your cash flow. And I think that can give like a really multiplied effect on avoiding those bad circumstances like declines.
Yeah. And Stuart, from your perspective then, more like from a consumer aspect, like how have you seen the experience change? Like, have you seen quicker payment times through the introduction of open banking, for example?
Yeah, I think it's a really sort of interesting one, because I think sort of open banking for me is going to be, really, it could, with a capital C, could really disrupt the traditional direct debit CPA payment routes that B2C firms use. And when you look at even all of your bills that you pay, it's either a DD or it's a CPA, and sometimes you do your own standing order. But of course, that's not in the business's control, the standing order. It's you as a person. You get rid of it, and they don't even know until they're not paid. So, but they come with a cost. Direct debits and CPAs, there's a cost, and certainly if there's a decline, and to your point, Joe, 1.7% declined. Well, that's cost, money for that decline. Whereas with OB, if you're taking that payment, it's a lot cheaper, it's faster, you've got the answer straight away. And it, there is a significantly less more money than using some of the traditional routes. I think where, it's one of those things that's got a lot better open banking, but I think the public is still not educated enough. And I think that's the problem. I think those all in the industry, and probably many of the folks listening in and others, that have been in finance or understand it, see the benefit. 100% they get it, they understand it. There's a real great tool for them. But I think, a majority of people don't. Certainly not in the industry. Will think it's maybe intrusion. Maybe it's a bit Orwellian. Oh, you can see everything. I don't want you to see these things. Rather than understand that, we're looking at MCC codes. I know you've spent, so many £100 at a grocery store, and that's gone up by 50%. Well, that's not me looking into your private life. That's me looking into you. Do you need help? Is everything okay? Because you could fall off a cliff here. And having that help and assistance. And I think once, consumers are more and more comfortable with giving that consent and doing open banking, you'll see more businesses start to use it as a payment tool, more as that method to take the payment, to draw, to like we used to call it push and pull back in the day, pull payment, push payment. And it will be, it will be a pull payment from the bank, and they're very cheap, easy for the customer, and quicker. So, and again, you can set those times up. The customer can say to you, "Well, I don't get paid till 9 a.m." Well, why are we trying to take the payment at 3 a.m. on a DD or a CPA when they've not got paid yet? So you can really sort of contextualize that and then make it a bit more personal for your customer base. But I think it's going to change. We've seen the change. But it's only going to change, keep changing and really gathering pace if consumers and businesses really embrace it and understand it's a tool for good, and it's not an Orwellian Big Brother tool just to make sure that, oh, you said you can only pay us £50, we can see you got 100. That's still that mantra that many people have, and I do understand it. And I think we've got to get people away from that, and it's up to sort of business leaders and others. And even from a perspective, I know the government did a little bit of work on this. Many will remember the adverts they did a little while ago, a few years ago, on open banking. And, everyone in the industry knew about it when they weren't very good, because it didn't explain it very well at all. But they need another run at this, I think, as we're coming into sort of away from, hopefully in the mid next year, away from recession a little bit, we start to come away. Things settle down, energy prices settle a little bit. I know they're saying they're not going to settle to 2027, but let's hope they're wrong. And really push this again, because it's just going to benefit consumers and businesses all along to do payments in this way.
Yeah, I think I have something to add there as well, if I could quickly jump in. Like, I also open banking has been a thing for some time, and I think back when I started out in fintech, like, if you talked about percentage of usage of open banking, it would always be in like 10% or less, for example, right? But you said earlier, Stuart, like 70% of your customers are choosing open banking. Last month, we had 68% of our top-ups in UK were like via open banking. And like, when I first heard that from our lead on the open banking space for UK, I was like, wow, that's really high. That's awesome. Like, this is starting to become like a really dominant thing. So I hope I have some positivity there on like, for anyone else listening, on like how how prevalent now, like people's familiarity is with open banking, especially in places like the UK. And then when you go to the rest of Europe, there was one other tip I wanted to give as well on how you think about overcoming the unfamiliarity with open banking. And that is like for anyone building product, is to make use of your product designers. So if you go and like put a button there that says open banking and you launch something in the Netherlands, customers are not necessarily going to be, they will not be familiar with the words open banking in the Netherlands, right? What they use there is ideal. So what we did when we rolled out in the Netherlands was we just said authorized from your bank or some other language that was, still made sense, but wasn't specifically the product name. And the experience of authorizing is actually better than it is in other markets. So in the Netherlands, you get a notification on your mobile app, use your fingerprint to approve it, and the money automatically flows through, the same as it does for Ideal, which is their local payment solution in the Netherlands, right? And we were able to overcome that sort of hesitance and uncertainty around just the words open banking and replace that with a really nice customer experience that felt familiar. And as the person who leads up product for localization in Pleo, that is like a massive positive check for me, because it's like, okay, if we go to any of these markets, we're going to get an experience that feels familiar to customers there, and we're using the same tech. Like, that's huge. But yeah, I wanted to just jump in with those points as well.
I think they're great, Joe. Really are, because we look at different markets, things like that. It's like, I remember what Joe said. Don't call it that. I think that's really sort of great little tips on that understanding. And I think, like you say, your product designers, when you're looking at this sort of stuff, when to do that A/B and that test and learn, you need to be in the right place. When we sort of look back, say 14, 16 months, we weren't at that 70% level we are now. And some of that is because of customer education, but a lot of it is because the product designers have done it in a different way, where the open banking button is there. But there's more of an explanation. There's more of that, this could increase your credit limit if you, press it, because we've got more data and customers understand that. They go, yeah, actually, I might, and they'll go and they'll have a look and, oh, I've got a bit more. Oh, this is really cool. And it's just that you're absolutely right. The product designers on it really have to get into the weeds of it, understand what you're trying to give your client, whether it's about a business or a consumer, and say, make sure they really get it. Because otherwise, if you just got a big button there, everybody goes, oh, I don't know what it is. I'm not bothered. But like you say, you really sort of put it out there and really explain it, get it nicely designed, and you'll get more engagement. And like you say, even just calling it the right thing will make sure you get, double-digit engagement on it. So, really sort of that's good tips for us all, Joe. I think we all thank you for that one.
Yeah, I think it's a pretty good point. I think that consumer behavior angle is like really key. I think we're so used to different methods today. Like, maybe this is the wrong way to phrase it, but I think we've become this kind of lazy generation, maybe, where we expect things instant. Like, we're ordering an Uber Eats, for example, it's a couple of clicks and one click to pay. Or so why can't other experiences be similar? I've come from the investment world, for example, and everything was very kind of a slow and legacy, and such a pain from a customer experience. So I definitely agree. I think to have that really good user experience will be really beneficial on increasing customer engagement on open banking.
Sorry, Anthony, it's that here and now generation, as we call it in digital. It's the here and now generation, and a lot of that, we have to blame Amazon for, and we do, because when anybody first used Amazon many years ago, it was lots of clicks and lots of things, but their product designers got their arms around it, understood the customers, understood what they can and can't do, and literally all of us now can click on your Amazon app, use your fingerprint, see your purchase, click yes, done. And you're done in, say, 3 or 4 clicks. And you've just bought something, and it's there the next day. So it is that generation, and we've all, even myself getting older in life, I'm used to that as well. So if it's not doing it in 4 or 5 clicks, I'm getting frustrated, and you're thinking, well, why? Normally you used to take 10 clicks in a week to order it through your catalog. But it is that, your product designers can really help understand the customer base and get those clicks right and smoother journeys, which open banking gives.
I think maybe I can add something really quickly. I think you wanted to move on, Anthony, but we have this is also super important in the B2B space, because B2B is also behind on B2C, right? You've talked about e-commerce experience. They've been like 10 years of perfecting the payment experience to be as simple and as intuitive as possible, right? And we have this expectation as consumers. But then your finance teams and your admins, when they go to like pay someone, pay an invoice, top up their account, or whatever they need to do, it doesn't have the same level of detail and the same experience. And like, we have this philosophy at Pleo for sure. It's like, there's no reason that our admin teams and finance teams, our customers, shouldn't have this incredible experience when they're moving money. If anything, it saves them, like, it's better for them, because it's not just that you're not able to sort of buy this reactionary thing through e-commerce. but that you're able to like, pay your supplier on time, which could be a result of like a massive cost to your business if you don't do it right. So there's like huge impact by getting that right in the B2B space. Sorry, Anthony, I had to jump in there too.
No, perfect. No, seriously, we could talk about this all day. I think there's some like really interesting points here, and yeah, we could go on for a while. Shame we've only got 45 minutes, but I think I think we touched on some really like good points there around kind of the future, and I suppose just to leave the payment space in kind of a final. Maybe a final point from each. I think we've spoken around that. We're kind of moving away now from this single payment use case that we've seen good adoption and increase over the years since the inception of open banking payments. So maybe kind of one area from each of you guys, where do we see maybe the payment space evolving, and one key area that maybe the industry needs to concentrate on. So maybe Stuart, I'll start with you.
Yeah, I think for me, from a consumer perspective, it's going to allow, and I do think it's crystal ball time, guys, on what do we think this is going to look like. But from a consumer perspective, if the consumer's got more control of their money and the budgeting side of it, and they owe some installments back, but they are struggling, they will be able to. And this is the work that you do with your open banking partner, is that the customer can do a bit of a budget thing, and will take the money straight from their bank account on their payday. The amount that they say might be reduced slightly, but it helps the cash flow. It helps the customer. It helps us understand. Certainly with customers who, and there's a huge amount of this country who work for a living but do get top-ups with universal credits and and all of these things that used to be family allowance. That's how old I am back in the day, and they're all paid at different times. And of course, they're working 16 hours a week. They'll get the salary on a certain day, then they might get the universal a week later, and then family allowance 2 weeks after that. With open banking, we're able to, you will, and this is where I'm hoping we're going from a consumer finance perspective, is make those agreements with a customer who need to budget, who can't quite pay, haven't fallen off a cliff, they're not defaulting, but they're struggling. We can identify, we can help. They can then set that plan up based on those payment dates with the different payments they get through the door, and we take a percentage that they agree on straight from the bank account. So from our point of view, from a finance perspective, you're not having to write it all off because you've got no idea when the payment's coming in. You've got a plan. You can talk to it and say, look, this customer's going to pay. It's going to be late, but we know when it's coming. And then that customer's comfortable saying, well, I'm only going to get that money taken from my bank, open banking push payment on the days that I've asked for and the amounts that I've requested. Because you can make it dynamic. Excuse me. You can't do that with direct debits and because it's that amount you're going for at that time. That customer will say, well, actually, I'll get my salary on this date, so take 50. And then 2 weeks later, you can take a tenner. And after that, you can take a fiver. And we'll do that for 6 months. Is that okay? It's fine. You see, then that's, for me, is that real ecosystem, that dynamic for the customer to be in control of their finances when they start to get a little bit in trouble. And it's not that I'm going in for the £100 and the customer's panicking, trying to move money and borrow money until they get paid next week, which is what happens. We know it's happened time immemorial. With open banking, we can set those levels of payment on those dates. And for me, that's a fantastic, way of doing this. And it's sort of that new world where the customer feels more in control and you're not making the panic. And they're not thinking, oh, God, I'm going to have to lend 20 quid for my mum because I don't get me universal till next week. Why are we doing that to customers? Why do the traditional payment systems do this? But open banking will overcome that and give that real great experience. And that's kind of, for me, from a consumer point of view, consumer duty and putting those things together, with FCA businesses, this really will open that door, open everybody's eyes up that we're helping the customers. I think it's really powerful.
Yeah, no, I think that's definitely key. And I think we kind of just move away from just a payments conversation and it becomes more of like a data plus payments. How do we utilize both products? So you're talking around there kind of smart money management, right? Like I can check my balance and then move funds based on how much funds I've got or my income. So I think it does become really powerful, and we've seen kind of the initiatives like VRP, say for example, it's very very kind of early stages, that is going to help with that, with kind of sweeping of funds, and it's going to help with financial well-being, for example. So yeah, I think there's some really key points. I think that, Joe, then from your perspective and maybe thinking about that business angle, maybe kind of where do you see that evolving?
Yeah, I mean, you mentioned VIP there. Like, I think I'll jump into that angle. So what VIP is, variable recurring payments. Basically, you can pair your bank accounts together. So I have a bank account with Pleo, I have a bank account with HSBC, and I can basically link them, which allows Pleo to then move the money between them because I've given authorization to Pleo based on conditions, right? So Pleo is able to move money 3 times a month, maximum of £50,000, etc. So you have the security angle, and you have the the flexibility of Pleo being able to move that money really quickly. So that's VIP. Where I see this being really useful long term is when you get into multi entities and really, really big businesses that have footprints everywhere. Like, I mean, even Stuart, you were talking earlier about, having a foot in the US, having a foot in South Africa, and a foot in the UK. Like, how do you, when you really look at that and what a business and a finance team needs to do to manage their funds for both their employee spending, but also their invoices, it's really complicated. And there's whole processes and checks and double checks and approvals, right? It's really, really complicated, time consuming, and costly, right? And nobody wants anything that's complicated, time consuming, and costly in this current environment. So when you have technology like VRPs that we talked about just now, then tools like Pleo can start to do things that make you play better in that ecosystem, right? So when a business adopts someone like a tool like Pleo, we should be sensible that we're just part of a larger ecosystem. And if we pull a bunch of money in one month because we think a lot of employees are going to go to a conference that month, and then it turns out that they don't, like, let's push the money back. Like, we can start to be part of the ecosystem in a way that's really, really supportive of what the business actually needs. And I think fintechs in this space can do a lot with that type of technology.
Yeah, no, definitely. No, I think
I'm also pitching Stuart on Pleo as we speak, if you didn't realize.
I read between the lines, Joe. I read between the lines. But no, I mean, you're absolutely right. And I think it's, when you've got complicated businesses, the stuff with open banking and you've got a product like Pleo, it certainly does. You've still got invoices coming in different currencies at different times and they're pulling them through. And you do get that, it's too clunky. It's not slick. It takes too much time, and your costs and your overheads are, start to go for the roof on manual processes that actually, this is the point in fintech. This is what we do. We grease those wheels with technology to make they're easier. So, an open banking for me is a real driving force. It's the V8 engine, in your car. It's the one that really gets you going quickly, and it's slick. And that's what we really are looking at, across the piece here. And as Joe was saying there, making it slick and push the money back, things like this. But actually, with our customers, as we're onboarding them, we can make the process very slick, very easy, give them the right product. As we start to build our product sets over the next 12 to 24 months, we can offer different products based on that real granular data that we know we've got from Yapily, and say to the customer, you can now have this product because you qualify, and now you can have this one because you're a VIP customer, and you can play around with that data and come up with great products for your product team and designers off the back of the data, the granular data. So there's so much. I mean, we could talk about this all night, James. I know we could, but there's so much more in there that you can do. Literally, your mind's the only thing that will stop you producing great products.
Yeah, no, definitely. I think they're really, really good points. And again, I think I've really enjoyed this conversation and kind of understanding how both your kind of, different businesses, different customer segments, and how we're using open banking to really, make a difference, I think, in the industry and make, kind of financial products available for everyone and a lot more efficient. So I appreciate, maybe now time to kind of see what the audience have got to say. We've seen a couple of questions that have come through from the audience, and I think hopefully they've enjoyed the conversation as much as I have. So I think we've got a question here around kind of open banking. I think there's a couple of maybe a couple of people who are new to open banking. So from your guys' perspective, we have a question here around we're talking about open banking partners and integrations. Is there any advice you maybe give when selecting an open banking partner? What do you look for? And Joe, let's start with you.
Yeah, so I mean, I'm a product manager. I work with engineers and designers and build stuff to change the product, right? And often we would be the ones that would suggest something like, hey, we should pick up this new partner so that we can make the product experience better, right? But the problem with being on that team is that you're not always the decision maker on who to partner with and who to choose, right? So I would say to any, like, I guess CFOs or CTOs or people that are thinking about like what partner you should choose, it's worth listening to your PMs and your engineers. And if they've done assessments on the API documentation and how the platform actually works and the future potential that it has, like, listen to them, because I think that's a really critical part of working with a partner in the finance space. So commercials are important, but also like look at company fit and look at their actual tech platform as well, and make sure that that's also a fit too. That'd be my number one thing as a selfish PM, is like, please listen to us.
And as a selfish operations guy, Joe, I'd say don't listen to the PMs. What I'd say is, I totally agree with you, Joe, 100%. And I think it's the conversation at the front, which is the most important. You know, if that CTO and the CEO and actually say, right, we need open banking, there seems to be a revolution, let's not miss this boat. Okay, great. What are you trying to achieve? Number one, what are you trying to achieve? What are you solving for? Now, some people might say, oh, it's just the risk front end bit. Okay, and if they do, wonderful, but you'd say, well, you're not using 90% of what OB can give you. So what are you trying to achieve? And then operationally, the ops guys and the product guys then would have a conversation, because my fraud teams, my collections teams, my service teams, my retention teams would all sit down with all the product guys and go, and they'll all put their hands up. They'll go, I want it for this, I want it for this, I want it for, and it's brilliant, that's great. Get this massive long list of stuff, get the product guys to ensure these are the things we want. And then you go out with your RFI to those vendors and say, can you do this? Can you do that? And those that can say yes, and I always have the 80-20 rule in everything in life. If 80% of it is a yes, that's where you go. Because you're never going to get 100%, you're never going to get everything you want. But if you get 80-20 in this, then that's where you go. And for me, it's about, to Joe's point, for him, it's about making sure the product fit and works. For me, operationally, what am I trying to achieve? I'm trying to reduce fraud, I'm trying to increase payments, stickier journeys, lots and lots of things. How do I get there? This list of stuff, can you, Mr. Open Banking person, do this for me? And that's what we did, as I say, recently, but now with Yapily, it was a big list of stuff, big shopping list. Can you fulfill this? Yeah, we can do it. And that would then down to our product guys saying, are the APIs correct? Do connections work? So you can go two way around. You can go technical like Joe, or you can go pie in the sky, unicorns like operations are. We wanted to do all this great stuff.
Yeah, no, I think they're really good points. I think, you know, it's kind of highlighted there is a lot to consider, you know, when picking the right partner, and things like, you know, ease of integration and that expertise that those partners provide as well is really key when it comes into your decision making. So that's great. And I think just probably got time for one more question. And a question that we've seen from the audience is, you know, will you use request to pay when it's available for making part payments? So from a Yapily perspective, this is something that, you know, there seems to be demand for, with, you know, doing a bit of discovery work around pay by link and you know, part payments at the moment around enabling that feature. So it is something we are discussing. So as soon as we have an update on that, we'll definitely share that with our community of customers. But I don't know, from your guys' perspective, do you see that demand from, you know, for that part payment aspect, and maybe more of a, you know, request to pay rather than through other payment methods? And Stuart, I'm thinking like buy now, pay later, right? You know,
consumer credit,
splitting that payment
definitely.
up.
Yeah, consumer credit definitely is one of those things that, you know, we really sort of are keen to look at as it starts to come in and use, because part payments and partials to help customers through bad times are massively important. And, you know, if you can make it a lot easier for the customer will pay you more than somebody who it's not a sticky journey, it's clunky, they've got to ring someone, they've got to transfer, they've got to do something. If a customer's got to do something, they won't do it. They'll go with the one that they don't have to do anything with. And that's all I always say, make it easy. Customer don't have to really do much, you'll get your money. And the partial piece and other things like that really sort of come into that gift.
Yeah, and Joe, I suppose from a business perspective, well, if you think of kind of maybe invoice payments, you know, if I'm a supplier, you know, wanting to, you know, obviously retrieve my funds for the service or goods that I've provided, is that something that's come up from your customers' perspective?
I actually don't have an answer for this. It'd be too much ripping off my head if I said I did. I don't work in the invoice space, and I'm not familiar with how that would work. So not sure.
No worries. No worries. But Perfect. I think we're just out of time, so unfortunately, don't have any time for any other questions. But if they do come through, however, you know, we'll obviously endeavour to respond to all the questions that we've received. But yeah, I think, you know, first of all, I'd like to thank you both, Joe, Stuart. I think fantastic guests and fantastic conversations. I think there's a lot of kind of thoughts going through on the back of that conversation where open banking is going. So yeah, really appreciate your insights and making the time for us today. And also, you know, thank you to you guys, the audience, for attending today and again making that time. We hope you enjoyed the conversation and the insights that both Joe and Stuart have provided today on the webinar. You know, for more information on you know how open banking works and how your business can leverage open banking, you know, please do visit yapily.com and there'll be more information around there on the APIs. But yeah, thanks very much. Enjoy the rest of the afternoons and evenings, and goodbye. Thank you.
Thank you.